So, when you think of Elon Musk, your mind probably jumps to rockets, electric cars, maybe even AI, right? But what if I told you the biggest move he might be making has nothing to do with any of those? Turns out there's a massive crypto story hiding in plain sight, and it all boils down to a potential gambit with Bitcoin.
Yeah, the headlines are buzzing about this potential mega merger between his companies, and it's a huge deal. But the really interesting part, the story you're not hearing, is buried deep in the accounting, on their balance sheets. See, this isn't just about corporate strategy. It's a move that could create a new crypto powerhouse.
And that's the big question, isn't it? A merger isn't just about combining teams in tech, it's about combining their assets. And when that asset is one of the most volatile in the world, putting it all under one roof has some pretty massive implications. So let's take a look at what that would actually mean.
To really get our heads around this, we need to forget the merger headlines for a second and just look at the raw numbers. Combining these companies would create this incredibly concentrated Bitcoin holding. So let's break down exactly what each company is bringing to the table.
All right, first up, we've got SpaceX. Now, as a private company, its finances are a bit of a black box, but we do know it's holding about 8,285 Bitcoin. That's a really substantial position all on its own.
Okay, now let's add Tesla to the mix. The electric car giant holds even more. We're talking 11,509 Bitcoin, according to their latest public filings. So you put those two together, and what do you get? A combined stash of almost 20,000 Bitcoin. That's a huge number for sure. But what does it actually mean in, dollars and cents?
Well, at today's prices, that crypto portfolio is worth a staggering $1.7 billion. All of a sudden, this isn't just some small detail in a merger discussion. It's a massive financial asset that you just can't ignore.
And to give you some idea of how huge that is, a combined Musk entity would instantly become the 7th largest corporate holder of Bitcoin on the entire planet. I mean, that puts them right up there in the same league as major crypto-focused companies.
Now, you might be thinking, okay, just add the two piles of Bitcoin together, easy peasy. But it's not that simple, not at all. The real complication comes from a fundamental difference in how these two companies are built and regulated.
And this is where it gets really tricky. See, Tesla is a public company, so it has to play by these super strict accounting rules. That means every single wild swing in Bitcoin's price, up or down, hits their quarterly earnings report. It's a huge headache. But SpaceX, being private, gets to sidestep all of that intense quarter-by-quarter scrutiny.
And this whole public versus private thing becomes absolutely critical when you remember that SpaceX might be heading for an IPO. If it does go public, you can bet that institutional investors will be combing through its books, and a multi-billion-dollar crypto holding is going to be a major talking point, especially given the history of Musk's other public company. Which brings us right to Tesla's past. To really get why investors might be a little nervous, you just have to look at the company's bumpy and kind of unpredictable relationship with Bitcoin. Let's just say it's established a certain reputation. Okay, let's just run through the tape, shall we? In early 2021, Tesla makes this huge splash, buying $1.5 billion worth of Bitcoin. But then, just a little while later, it sells off a chunk. Fast forward to 2022, and they dump about 75% of their holdings, pretty close to the bottom of the market. And now, they're just holding steady. It's not exactly a picture of stability, right?
So yeah, this whole sequence of events has really cemented Tesla's reputation. On the one hand, they're a huge player in the corporate Bitcoin space. On the other, they're, inconsistent. And that history makes any new crypto move linked to Musk a very sensitive topic for investors who value predictability.
So what's the bottom line here? Look, for now, there's no sign they plan to buy or sell anything. And these holdings, they're just a drop in the bucket compared to daily trading volumes, so the immediate market impact is probably pretty small. But, and this is the big but, the long-term idea of concentrating this much financial power under one roof, that's what really matters here. If you zoom out a bit, this whole situation really points to a much bigger shift that's happening. Whether this merger goes through or not, the key takeaway is that Bitcoin isn't just some fringe asset anymore. It's quietly becoming a normal part of the balance sheets for some of the most valuable tech companies in the world. And this quote just nails it perfectly. Even when Bitcoin isn't the headline, it remains on the balance sheet, and that alone is enough to keep investors watching. Its mere presence is a signal, a new way of thinking about how major corporations manage their money. So it all leaves us with this one really fascinating question for the future. As this trend picks up steam and more big companies start holding digital assets, are we going to see our very definition of a stable, blue-chip company start to change? It's definitely something we'll all be watching very, very closely.